everyone. Sorry I'm a little bit late getting to the room this morning. We had a little bit of a power failure last night and had to reboot my computer, and well, you know what it's like when the power goes off suddenly. Computers don't care for that very much. All right, so yesterday turned out to be a rather strong day. We'll take a look here at the Eagle. So the afternoon session put in a very strong rally, rallying right into the close. The market finishing around the 48.40-ish mark. Overnight, very quiet. Look at that, just a perfect sideways range. And we're opening up where we left off. Pardon me, this actually looks a lot more like a Friday session. The kind of day we might expect going into the weekend. But we'll let them figure things out here. Then we'll take a look at taking advantage of any opportunities that come our way. Yes, Russell's already noted that I've rolled over into the March contract. He says there's more volume in the December contract. You know, I can't I can't seem to win. Usually if I stay with the front month, which in this case is December, I get people saying, hey, NinjaTrader's giving me this warning that December's expiring. Why are you still trading December and not March? So this time I roll into March early, and Russell's saying, why aren't you still in December? There's more volume in December. Listen, folks, the index markets are so liquid. I actually used to trade the index markets up into the second to last day. So they really don't expire, in spite of the Ninja warning. They don't expire until next Friday. I would trade the December contract until next Thursday. But like I said, I would get everybody in the trade room saying, why are you still on December? Shouldn't you be in March? There's enough liquidity in March right now that if you're already in the March contract, you don't need to worry. And if you're still trading December, that's fine too. The volume is greater, and the moves will be the same. The signal should actually coincide or be very, very close. And really all we're looking for is looking to trade a market with adequate volume. It doesn't look like we're doing much here at the moment, so I'm going to show you a neat little tool that Ray Burke used to show folks. Oh, actually, if you're going to do this, you need to still have your December contract available. I keep putting that on the wrong side. They should have changed this word here to symbol instead of name. So you'll see by default you already get the March contract. So you can go into December, load that one up, and then you can make yourself a market analyzer. That's going to give you a chart like this. And what the market analyzer allows you to do is you can compare two markets. So we'll compare the December NASDAQ, and you can do this, of course, for any market you're interested in, to the March NASDAQ. Now, I don't care so much about the pricing, so if you right-click, you can go down here to your columns, and we'll remove the price, and what I want is, I think it's daily volume that I want, but I'll plug in the average daily also. So we'll apply that. Yeah, I guess it's the daily volume. And you can see that the December contract, as Russell pointed out, is much more liquid. This is going to start to change next week. By Monday, they should be a little bit more even. But you are absolutely correct. There is more volume in the December contract, but even so, I don't expect to see any slippage. All right, so what do we got? Well, here is our first in-sync eagle signal of the day, but quite honestly, with all this sideways trading, I'm not sure I would feel comfortable doing that. If I'm going to do it, I might even consider taking profit here on this high, right where we're at. There we go, we got a breakout. That should be good for half of the profit objective. So if you're running a single contract, that would be $100, which is still a decent little profit to take out of a trade. Okay, Moses is having some sound issues, I'm assuming. If I could just get a sound check, please, from somebody, anybody. Hello? Oh, okay, good, thank you. I'll just let Moses know. Okay. So we're testing yesterday's highs, a little bit of a breakout. Are the buyers going to remain bullish? You can do this on any of your tools, of course, but let's just see how a trend line falls here. Ooh, that's a little shallow. not getting much input from drawing a trend line. Crude oil also a little sideways. And soybeans down a little bit. So here's crude oil. Again on the Eagle. The market, well, did put in a little bit of a low through the overnight. Yesterday's session, a little bit more bearish, but a lot of that occurred during the overnight also. The day session itself, that was it right here. It looked something like this, and you could even extend that if we just consider the day session. We're still here. We're still in this sideways range. All right, well, I'm just a little bit reluctant to commit. So we'll just sit here and wait. Russell's asking, why are the daily range blue lines so far off the open? Are you referring to the support and resistance suite here, Russell? If so, the lines recalibrate depending on what's been happening in the market. So yesterday, of course, a rather strong rally day. So these support and resistance lines, they do take price into their calculation. And given the ranges, if the market becomes more volatile, well, that's also going to increase the spacing between support and resistance areas. And that's what's happened here. So we're currently trading above the median line, but just barely. Yeah, mine would be different. Russell says yours are totally different from mine. Mine are different because I'm in the March contract. If you're still trading December, the December figures will be different. not sure if I answered Russell's earlier question, Russell, regarding the contracts between December and March. He says, well, there's like 12 times as much volume in the December contract. Yes, that's true, but there's still adequate volume in the March contract. The market just opened. We're already up to, what was it, 6,700, almost 7,000 contracts traded. The only time you're going to run into slippage issues is if you're trading a market maybe like oats, where you may see 6,000 contracts traded all day. If you're looking at maybe a couple hundred contracts traded per bar, you could get into some slippage issues, both getting into a trade and getting out. But if we're already up to 7,000 contracts and we're only a few minutes into the open, we'll be all right. And like I said, that is going to start changing over after this weekend as we get closer to next Friday when the contract truly expires. We're going to see a lot more traders rolling over. But you got lots of time. I don't know why Ninja prompts you to roll over as early as they do. Somebody must have got tagged once and blamed them. And so now as is the tendency to do, they've swung over to the other extreme. Well, we've got a red bar buy on the hawk. It's not all that inviting, though, given the sideways nature of the market. Here, the Raptor showing us a pretty good picture of the sideways market also. This may well be a test of the extreme. We've already produced a couple of sell signals, but those two have not had any real follow through to them. buyer's looking a little stronger here. Or at least attempting to be a little stronger. Oh, yeah, Dan says, my NinjaTrader seems to be hung up. I only have blank screens. Have you seen that before? Yes, sir, I sure have. Let's say, for instance, let's see, what don't I get here right now? So oh, okay, bad example. I don't get a daily feed for the spider, but I do get a snapshot. Yes, I know exactly what you're talking about, Dan, and it's your data feed. Make sure your data is connected, and what you need to do is you need to refresh your screen. So you can either change markets and go back to the market you want, or you can try this. You can reload your Ninja script. You can also try reloading all historical data. If that doesn't work, close your Ninja program and reboot it. And if that still doesn't work, then you got to pull out the big guns and go here, I believe, to your options. And where is it? Here, under data, reset DB. That's going to reset your database. Or you can try to repair DB first. These zero everything out and should repair the problem if you still have a problem after doing all those other things. So that, once again, that was under the Options tab. You go over here to Data, and then you can reset database or repair database. Normally, however, shutting down your Ninja and rebooting it will solve the problem. Okay, we're getting a retest of the bottom end here. Tony's asking, can you go over the Raptor signals, especially the hard and soft edge bounces? Absolutely, Tony. 1 second here. Okay, so the Raptor, of course, a blend of the other birds all smushed into one, so you get attributes of all the DTS birds here. The cloud, of course, being very significant on the Raptor. And just like on the Eagle, we anticipate some sort of reaction off the hard edge. So let's start with the hard edge bounce, because that's going to be your strongest one. And the reason we run dual bands is because Ricardo figured out that, hey, sometimes the market doesn't retreat all the way to the hard edge. Sometimes it comes up a little bit short, and it encounters a bounce kind of mid-cloud. Now, I should point out that when Ricardo suggested running a dual band on the Raptor, he's much more of a scalper. He doesn't really hang on for great big moves, so he would be looking to take any trade that bounced off of either line. Typically, what I do, I'm trying to find you one here that's more textbook. All right, this is a little bit more textbook right through here. You see the market come into the cloud, it encounters the hard edge. In this case, we get a double pullback signal off of the hard edge, so the market moves into the hard edge twice, produces a couple of sell signals, and it's that second sell signal that we're going to be most interested in. This is the one where we anticipate the market to go. In fact, if you looked at your hawk, I bet you this was a 4-arrow consolidation on your hawk. All right, so that's kind of how some of these signals start to overlap. The hard edge bounce is much stronger than the soft edge bounce. I don't usually consider soft edge bounces. Here's a soft edge. The market encountered the soft edge. Here comes a buy signal. Now, this one did not engage, but if it had, you can see you still have a deep pullback. I think this is why the hard edge bounces are a better bet to hold out for, because at the very least you'll have somewhere to cover the trade. If we took this trade, and again it didn't engage, but we're pretending now, if we took this trade, our stop should at least go down here, and barring that, you would probably put a stop somewhere near the hard edge. Well, you can see that would not have been enough to keep you in this trade. And even though I'll allow the market to give me a certain amount of heat, I don't like it. I don't like buying the high only to have the market retreat against me. Yesterday was a little bit of an exception because some of these soft edge bounces did have follow through to them. Now, if you're solely trading the Raptor, it gets a little bit dicey sometimes. I would have considered this a hard edge bounce. I would have considered that to be close enough to this edge here. But I considered it close enough because of that low right there. If we did not have this low, I would have required the market to trade a little bit deeper and get to that hard edge. So you need to remember when you're using these tools that, you know, this band really isn't here. All that is here for real is the price. So if the band misses the price point by a couple of ticks, that's okay. Just keep in mind what the market is showing you, and it's showing you a very strong rally. Now, you did not get perhaps a perfect hard edge bounce, but you did get another double pullback signal. So here's pullback 1, here's a very slight pullback 2. And this would have been difficult trading. I'm not lying to you. This would have been very difficult to take. Here's a better double pullback. It's a little bit more pronounced. Here's the pullback into the cloud. There's the market coming out. Here's the pullback into the cloud. Here's the market coming out. Normally, as I showed you earlier, we like to see the pullback go a little bit deeper, perhaps bouncing off of the hard edge. But when the market is very, very strong, you're not always going to get those deep pullbacks. But generally speaking, the soft edge bounce is not a very strong signal. Okay, if you recognize that the market is moving fast, go ahead. You can look at the soft edge bounce. You can consider it, especially in a double pullback type situation. Otherwise, I tend to hold out for the hard edge bounce. The soft edge sell, however, is different. The soft edge sell is a pure counter trend signal, and it occurs again with everything counter trend. We first have to have a trend. Well, there's no question we've got a very strong uptrend. And we also need to see a retest of the high, a retest and then a failure. So now we've got our soft edge sell signal. And we would anticipate the market to retrace to the hard edge here. That's our first objective. And do we get there? No, they're struggling, and then they enter that sideways range. So they get down there eventually, but reluctantly. So I hope that clears things up. I had somebody else write me just the other day about the soft edge buy or sell, buying off of the soft edge. And it really was just because yesterday's session. Yesterday was a very, very bullish day. Ron, way to go. Ron says 4 arrow consolidation in the hawk. Let's go take a look. 1, 2, 3, 4. You are absolutely correct, Ron. Well done. So a little bit of a pullback phase here. Also a first micro-macro cross as the bears try to take their whack at the market now. Let's see, just looking here where we are in the overall scheme of things. So we've got lows down here at 48.36. That would be the kind of the bottom end of our trading range. We have a late filter entry signal here also in the Falcon. Again, we're skewered by the median line. We're not drifting too far from there right now. The Raptor produced the cloud crossover signal. So the clouds cross, the market again moves into the cloud, comes out, produces a signal right there. Of course, since we are trading near the bottom end of the trading range, or in the trading range still, the problem we're going to have with a lot of these types of signals is where are we going to cover the trade? I think covering the trade here might be a little dicey, seeing that the market traded around 48.53 just a few minutes ago. It's not unlikely to see a trade back there anytime soon. Better stop would be up here around the 48.60 or even above the high of the morning. That would be ideal. Oh, doesn't matter. Market fell off enough to find our profit objective, and Now we're waiting again. Okay, we're going to get a green bar sell here. Oop, there it goes. It just tripped. What do you say? Do we think the sellers are going to pull it off? Maybe I just want to take a single. I'll try a limit. Come on. So all I'm trying to do is get back into this green. There we go. We got the green bar sell signal. Oh, you stinkers. Wow. So the failure of the green bar sell, now we're looking at the buyers having to show up here. And we're getting ready to do a first micro macro cross higher. What I'll do is I'll give them to 48.60. Come on. There we go. Come on. Let's see what else we got going on here. Possible trend change here in the Falcon. The Eagle also looking perhaps a little bit more bullish. The band very, very neutral. Same thing here with the Raptor. Very, very neutral band. I'll give myself a little bit more here on the break-even side. couple notes here in my trading journal. All right, so we're getting a little bit of a push. With a bit of luck, we'll see a retest of this low. We're almost to our break even. You could certainly roll your stop in above this swing high right now if you wanted. I'm trying to give the sellers every opportunity to get their act together. Come on. Peter says the support at 48.48 holding firm. Certainly is. It's where our median line falls. When the market is as sideways as it is this morning, and I'm just going here to the Eagle because it get a better view of the sideways congestion. We really can go either way from here. I know that's very insightful. Thanks, Eric. That's a big help. But it's important to recognize that when the market does not have any momentum to it, any trade you take is going to be a little bit of a crapshoot. See, so here now in the Falcon, just as for instance, we had a late filter entry to short right there. Oh, they got close. I don't know if it looks like they may have hit our break-even trigger. Certainly did not find our profit objective. So now we're getting a late filter to buy, late filter entry signal to buy. And it too is floundering. I've mentioned this in the past, but whenever you encounter a market where you get a high probability signal after a high probability signal and they don't follow through, then you may well assume that there's something not right about the trading day. Now, normally what I use for that criteria is the first micro macro cross signal. So if you get a first micro macro cross and it fails to hit its profit objective and you've run a reasonable stop, okay, it can happen. But if it, you get a first micro macro cross to sell here and a first micro macro cross to buy, So, okay, the sell order doesn't work out. The buy order should work out. But if both fail, it could just be one of those days. They are rare. They seem to crop up, once every 3 or 4 months where you just get a day the market is not following through, it's not responding. So you may just want to pack up your toys and go do something else. This might well be one of those days. Yeah, look, Peter 2, I got Peter 1 and Peter 2. Other Peter makes a comment. After a big run-up day like yesterday, do you take the next day off and wait for the market to settle down? It used to be that if we had a rally day, you could anticipate that the next day would be a rally day also. And if it was a really strong rally, you may get 3 days out of the rally. Those days seem to be long gone. Now it seems as though when you get a strong rally day, the next day falls rather flat, which is kind of what we're seeing here. I don't know if I would take the day off, but I would go in certainly with the knowledge that maybe the market's going to be a little bit more subdued. So here's a daily chart for the NASDAQ. And you can see here's a very strong rally day, and the next day another strong rally day. But normally what happens is you get a strong rally day, and the next day falls flat. Strong rally day, next day falls flat. So the NQ struggling here a little bit. Almost looks like we got a little bit of a mini wedge going on here on the daily chart, doesn't it? Yeah, Ron talking about follow through. He says, I got killed the other day because of the lack of follow through. And that's the other thing. When the markets are like this, as uncomfortable as it is, you have to be very patient with your stops. Well, I guess you either have to be very aggressive or very patient. If I was more aggressive with my stop, I would be out at break even right now. And that's not a bad place to be. I need to see this swing low fail. I need to see the market trade below 48.53 or it will go up through 48.60. We do have a first micro macro cross to buy. But obviously there's nothing in the news cycle, or they're waiting on something in the news cycle. No, all the news was pre-market this morning. European Central Bank press conference and the U.S. unemployment reports. Just for the fun of it, since there's nothing going on. Let's see what's going on here in natural gas. Natural gas inventory out, I believe, in a few minutes. Natural gas, one of these markets that, if you're looking for some casino-like action, this is the market for you. So where have we gone today? Actually, a rather subdued session here today. A little bit more going on in the overnight. Look at this. This is the overnight session. We are producing a buy signal about 5 minutes before the natural gas inventory release. Let's see, can I cover that? Ooh, nope. That's a little out of reach. Let's just see what that is dollar-wise. All right, now, if you want to do this just in sim, I would not suggest doing this with real money. Natural gas is extremely volatile. But I think I might bracket it something like this. Use my support and resistance line, buy above there, short below the primary support. It looks as though the market's kind of trapped in there at the moment. Go with the more aggressive stop, I think. Keep everything handy. Try to get out on a very quick reversal. Dan's asking, does DTS work with Ninja 8? I don't know 100% for sure. I haven't loaded Ninja 8 yet. Ninja 8 does have some pretty cool features, I have to admit. Nothing that's really going to affect the DTS system. However, it may have something, because it's still a new release, it may have a bug or two in it that will conflict with the DTS system. What Adam and the programmers are waiting for is a stable version of Ninja 8, because of course when the initial comes out, the initial release, there's usually a programming glitch or two. And not necessarily on the Ninja end, just something that conflicts with the indicator warehouse software. And once they have a release when Ninja is finished doing their updates, because what you're going to see, I think it's already Ninja 8.2 that's released. So they found at least a couple little glitches, conflicts. Once Adam and the programmers are sure there's a reasonably stable version out there, then they'll uh, program any conflicts that the DTS system has with Ninja 8. But they'd rather do it once rather than have to keep doing it every couple of days because of something else that changes in Ninja 8. Adam will tell you I'm notoriously slow changing platforms. In fact, he almost had to bribe me to go from Ninja 6.5 to Ninja 7. I always run the most stable platform, even if it's older. I don't need software glitches. Now, if you happen to have two computers and you want to play with some of the new features on Ninja 8, yeah, go ahead, throw it on there and see what it's like. But be aware if you're going to run Ninja 8, you may encounter a bug. I'm not saying you will, but you might encounter a bug with the DTS system. All right, so here we go, another minute, and we'll have the natural gas inventory. And I'm just doing this for merely for entertainment purposes. The natural gas inventory, like I said, this is a very volatile market. And you can see the price barely ticking. A few ticks up or down. They're waiting on some news here. Oh, I should have used stop limit orders. I forgot. Well, can't change it now. So what continues to amaze me about the DTS system, and I don't know why it should amaze me, but it does, is whenever we go into an inventory report, if the DTS system produces a clear signal, how the market tends to follow through on the signal side. You can see here we had a buy signal, which was a trend change signal going into the inventory report. You could have already been positioned long. And here the market makes a quick run up, nails the resistance line on the number, and I'm going to see if I can't change these to a stop limit. Oh, stop limit. There we go. Sell stop limit. So what the stop limit does is I've set a limit of 1 tick, which is not a lot for natural gas, as you probably have like a 3-tick slip in there. So let me show you what that looks like. So I've changed my stop limit slip to 3 ticks, and I'm going to do another OCO order here. So notice the range. So I'm prepared to accept a fill anywhere from 36.92 to 36.95. Oops. Lock your chart, Eric. Here we go. Wow, another very lackluster inventory report. Yeah, like Francisco says, sometimes when you're on the cutting edge, you can get cut and be the bleeding edge. Yes, that's true. They've done a lot of beta testing on Ninja 8, but because NinjaTrader and Indicator Warehouse are not related companies, Indicator Warehouse is not privy to the programming behind NinjaTrader. And so if there is a conflict, the programmers have to fix it. It's not that they can't fix it, it's just that while there's still upgrades coming, it's a lot more difficult to fix. Robert asks, are you taking questions? Yes, of course, Robert. Robert says, what's the moving average line called? Well, I just refer to it as a trend line. If you're asking what the value of it is, it's a proprietary moving average developed by Indicator Warehouse. I don't know the exact setting of it. Well, the natural gas inventory was a letdown also, so we'll put that away. It looks like the market rallied up here a little bit, tagged me out on my stop, so I guess in hindsight I should have left the break even where it was. Sellers might be loading up here again as we're back near the highs of the day. The Geiger counter was moving hard over here to the short side. Robert's asking, is it in my Raptor package? Well, okay, first off, folks, there's a lot more going on your chart just than what you see here. There's at least a half a dozen algorithms working behind the scenes here that have to be met to produce your signal generation. The Raptor does incorporate elements of the Falcon, the Hawk, and the Eagle. So I honestly don't know whether it incorporates the Falcon trendline into the programming, but I do know that it uses the Eagle cloud. And here they come again. Don't tell me that I got tagged just a little bit early. Come on, give me that red bar buy. I dare ya. We're back into the hard edge. There should be a little bit of a reaction. We've got a possible green bar sell here on the eagle. Okay, I'm going to take the green bar sell. And I'm going to have to cover the trade up above this swing high. And if they don't fall off from here, then I'm going to go do something else. So we've got something resembling a double top or a test of the extreme. We're coming back down here, producing a sell signal. I'm looking to retest the bottom end of this morning's trading range. If the market can get below here, we have a lot of room below the market. We're just very, very reluctant here at the moment. And I am getting a little bit aggressive, I admit. Good spot for a second push entry. We've already printed the signal. You could short just below the low, say around 48.51 half. Come on. Ah, they're still holding tough. I'm just going to hold my stops there above the high for a little bit. Well, a very lackluster kind of morning, isn't it? We'll hang with it here for another 15 minutes, get us to the top of the hour, but trading painfully slow this morning. You can see the trade forecaster here full on scalp mode. Yeah, got that nailed. Trend mode coming up in about 5-6 minutes time. The big question is, am I on the right side of the trend though? Will the trend be heading lower? Here we go. Coming back now with a green bar sell after another retest of the high. That's encouraging. Once again, if we take out this 48.51.75 area, essentially 48.52, it's very, very likely that we will see a retest of the low. And if we get below this morning's low, as I mentioned before, we do have room to move. Perhaps even back through here somewhere around the 48.25 area. Kind of halfways through yesterday's range. Oh man, every time they look like they're trying to break the low, they come back and hold the support. It's okay, Robert. Robert says, sorry to ask a question you've answered for me in the past, but what are the red and blue line on the indicator called? He says, honest, I'm writing it down this time. It's not a problem, Robert. You're probably not alone wondering what this red and blue line is. That's the ATR line. Mike Filigera, who trades the stock market with the DTS system, brought it to my attention one day. He said, you know, Eric, I get really good results when the ATR line and the Eagle signals are in sync with each other. So I started following it, and sure enough, he was right. So as with anything you're going to put on your chart, it needs to help you make a decision. If it doesn't help you make a decision, it's no good. Doesn't matter so much whether the decision is right or wrong. What? Really? Yes, really. Most people put so much stuff on their charts they can't make a decision anymore. It's important that you make a decision. You're not going to be right all the time. That's why we use the trade manager to protect ourselves when we're wrong. All right, to put the ATR line on your chart, pull down here to your IW indicators, and you're going to look for the one that says IWTM ATR trail. If you double click on that, it's going to show up in your assortment down here. And that's it. Just apply it. And voila. You have an ATR line there as your filter now. No problem, Robert. Robert says thanks. Well, I think we're going to button up the shop here a little bit. There's nothing going on right now. The market deadlocked sideways. When it gets this way, there is a tendency for the bears to have the upper hand. There's an expression in trading that says you need to feed a bull market all the time, but you don't need anything to feed a bear market. So if I were a betting man, I would say we're more likely to see the market tail off than to head higher, which is why I've been a little bit more aggressive on the sell side this morning. All right, well, we'll get back together on Friday, and, well, we'll take it from there. Hopefully things will shake up a little bit before the weekend. We'll talk to you tomorrow. Bye for now.